Hi guys, welcome back to the channel. If you are new, feel free to subscribe to see more videos like this where we trade the markets the minimalist way. So by keeping it simple, by making clear and simple analysis, by using clear and simple indicators. Today I'm looking at the British pound US dollar on the 1 hour time frame, and I'm using three indicators: the breakout pivotal bars and the sentiment index to build the setup, and the levels and zones as an extra confirmation of my setup. So by the way, if you want to test these indicators and more indicators, you find the link in the description down below. So what I'm looking at is this price action here. We had an uptrend here, but then it looks like we might get a downtrend here. Why I believe so? Well, first of all, and this is the reinforcing indicator that I'm using to make this assumption, we are now sitting below two major resistances, okay? One all the way up here and another one down here. These levels are very major levels. You see, if we have a look in the past, see how many times they get tested and they respect their levels. So once here, this acts as support, then it acts as support and becomes slightly as resistance, which prevents the price from going higher. Then it tries to push higher, but then it comes back down and it acts as support, which makes the price go even higher, and then all the way down. This starts to be a resistance, and you see that the price is now pushed down to the downside, so it tries to go even further down, but it cannot. It tests back this resistance here, tries to go higher, but it can't, stay low, and then when it finally can, it tests back this support here. It tested before the resistance appeared, and it went all the way up to test, and then again, and then became support and tested the support, and then down, and you see how these levels plays out. So since we are sitting below two major resistances, the price is likely to go down. Moreover, what I see is that if I draw a trend line here, I see that the price has made an impulsive movement to the downside and then is making some kind of retracement here, so a consolidation. You see, if I use this trend line to make you understand better what I mean, so I see the impulse here, okay, it goes down, all the way down, and then it slows down here and retraces a little bit with this consolidation. This is the typical setup that we look at when we use the breakout pivotal bars and the sentiment index. So we want to have an impulse and a consolidation. Then what I see here is that the sentiment index down here is getting pushed towards the zero line, okay? You see, it's decreasing. I mean, it's increasing, but it's the bearish sentiment index is decreasing. It's losing its strength, okay? Which makes sense, because it means that since the sentiment index is now pushed to the upside by this trend line and pushed to the downside by the zero line, in the coming future, in the very short future, it must decide what it wants to do. And it can do two things. The first one is to break down. So it's to break down this trend line, which means that the sentiment index becomes more bearish, the market sentiment becomes more bearish, and we should also see a breakdown here. So if we have a breakdown in the sentiment index and we also have a breakdown in this consolidation that I draw here, and the breakdown is made with a red candle, and by the way, the color of this candle is assigned by the breakout pivotal bars. So it's a red candle if it is a kind of a bearish candle, a green candle is a bullish candle, a blue candle, because there are some blue candles, are indecision candles. So it means that we must pay closer attention around the blue candles because the price could either reverse or continue its trend. So you should better understand what the price action is doing around those candles if you are interested in those candles as well. But what we are interested in here is to have a red candle on a breakdown of this consolidation, and at the same time a breakdown of the sentiment index. The second thing that the sentiment index could do instead is to break to the upside, so the bearish sentiment index becomes a bullish sentiment index. So it means that the market turns to the bullish side, and so we should see the price to go higher. In this case, I'm definitely not interested in this trade. First of all, because I always, when I see similar setups, I always trade for trend continuation. So I look for another impulse about the same size of this one. I'm not looking for a trend reversal. Moreover, in this specific case, as I said before, we are sitting below two major resistances. So I don't see the price having the strength to push through the first one and then also the second one. So I'm definitely not interested if the sentiment index goes to the bullish side. Okay, so I keep you posted on this trade because the setup is almost perfect, but unfortunately we don't have the breakdown yet. So we must wait and see if we get one. And here we have one. It's perfect because all the conditions are met. We have a breakdown in the price here. We have a breakdown in the sentiment index down here. The breakdown is on a red candle, so everything is met. And moreover, as we know, we are sitting below two major resistances, so we are good to go, and this setup is very likely going to our target, which I'm about to show you. So what I'm doing is that I'm taking the same impulse that the price made previously and I'm projecting it to the downside. So I start from the highest point in this consolidation. Okay, even though it was kind of a one candle movement because all the other candles are way lower than this one, but I'll use this as a reference, as a starting point, and then I'm projecting it to the downside. Okay, so we end up about at this level down here. So our trade looks like this. Our entry price is approximately at this level here, and then our target is going to be down here. Okay, regarding the stop loss, you can do a few things. If you want to be conservative, as I am, moderately conservative, my suggestion is that you leave the stop loss about at this level. Why? Because right now the price is at our entry level here, about at our entry level here. So if the price wants to come back up, we will be protected. If we leave the stop loss here, we will be protected by this sell zone, the red zone. You see this red zone is a sell zone area. So the price could come back up here and then be protected and pushed to the downside. And also we will be protected by the resistance up here. So we are just a bit higher so that we just give it a bit more room to go if the price should want to move that high. If instead you want to be more conservative, you can definitely stay up here at the same level, about at the same level of the buy area, so that you allow for the price to move somewhat higher, or even more conservative and stay all the way higher than this level here. If instead you want to be more aggressive, then you can put your stop loss just above the current candle. Because when we have this kind of impulsive movement, most of the time, even from the breakout point, in this case a breakdown, the price just moves to the downside, in this case in the same direction of the breakout. So in this case it's breaking down, and typically we should not expect that the price comes back up or significantly up. So you could also be pretty aggressive in this regard. Of course, it depends on you and depends on your risk attitude. It depends on your overall trading strategy. For instance, the typical target is this one, but maybe you look at the previous price action and you say, well, maybe I'll be more strict with the target and maybe put the target here, or maybe somewhat lower here, or maybe you see some structure even lower than this target, and so you move your target differently. This is totally up to you. Every trade is personal and every trader has his own rules, so you should always stick to those rules. The most important thing is that when you build the confidence, because you have the indicators which are solid and allow you to make a clear and simple analysis of what's going on, then you should stick to them and you should stick to your rules and never change your mind. Okay, so guys, without further ado, let's now see how the trade evolves. I'll definitely keep you updated. A quick update, guys. So the price is moving lower quite rapidly. As you can see, it didn't test back this sell zone or the resistance. As I said before, most of the time you see an impulsive movement, a second impulsive movement to start from the breakout level. Right now we have two blue candles, and as I said initially in the first part of this video, these blue candles are indecision candles, which mean that the price could continue its trend or could reverse. So you should pay a closer attention. So what I see here is that the price tried to push lower and failed, and then is trying again. But I see that the sentiment index, the bearish sentiment index, is going down and it is accelerating. So I'm expecting these blue candles to be a trend continuation, so I don't have any issue with my initial analysis. I believe it is perfectly correct. I mean, it is very high, the likelihood that the price will reach this level, because these setups happens daily on every asset and time frame, and it's always the same. What I did for extra safety is that in my trading account I moved the stop loss to break even at this level, so that if the price comes back up, then I'm out of the trade with a profit. It's a tiny profit, but it's still a profit, and more importantly, it's not a loss. So in the worst case scenario, I'm out with a profit. In the best case scenario, I'm out with a profit. Isn't that beautiful, guys? So let's see how this moves and I'll keep you updated. And we are out of the trade with a 2.4x return, which is very interesting. The price just kept moving lower quite rapidly. I mean, we had a very nice impulse to the downside, which is excellent. When we have a first impulse and then a consolidation and every rule that we use is met, then it is very likely that we also get a second impulse about the same length of the previous one, just like in this case. So I'd say this is a pretty safe setup, and this was also supported by the fact that we were sitting below two major resistances, which increased the degree of confidence that we could have in this kind of setup. So guys, that's it for today. I hope you liked the video. If you did, make sure to like it down below. Subscribe as well if you didn't already. If you have any question, feel free to ask, and I'll see you guys in the next video.